Hey everyone, this is Ian for Bold Profits, and welcome to our weekly Friday video. And again, in these videos, I'm going to be taking some recent news headlines, kind of providing an alternative view of them, and essentially disagreeing with them, rationalizing them, explaining why I believe the opposite of what they're saying, and why these headlines that are used to cause fear, for the most part, aren't really worth listening to in the long run. So this week, I'm going to be talking about cryptocurrency, and there's been a lot of news about Facebook's cryptocurrency, Libra, whether or not you are really paying attention to the crypto market news at all. This has been all over like mainstream news. So what's going on is that Facebook has been working on this project for a while, and they are trying to decide, there's all these court cases trying to decide whether or not Facebook should have a cryptocurrency as this huge private company, whether it should be regulated, how much it should be regulated, and just all this scrutiny surrounding it. And people are saying left and right that this is why Bitcoin has dropped. But I really don't believe that's the case. It might have had an effect on the price of Bitcoin because once people see this stuff and they see the reasons that people lay out in these articles, they might sell out of fear. But that's just, I believe, something that's going to be caused in the short term. And I really think that this Facebook thing doesn't really have a big effect on the crypto market at all because people knew that Facebook was interested in crypto, that they had this secret plan, this secret project going on. And that information was released last May. So that was in the middle of the Bitcoin crash. Bitcoin went down 70% after that news was released. So it's not like, oh, Facebook's having this huge thing with crypto. They like crypto. They're going to make their own coin and Bitcoin surged. No, it went down 70% after that news came out. So people want to like blame or associate the whole Facebook thing for this Bitcoin crash, and they also want to say that the Facebook cryptocurrency is why Bitcoin went up in the first place. In March and April, in the beginning of that rally, they're even saying that Facebook had everything to do with that. It's the reason for all of Bitcoin's price movements, basically, in this big rally that it's had for the past few months. And I really don't believe that's true. Like I said, after this plan was initially released, where you think it would have had a positive effect on the crypto market, Bitcoin went down 70%, and it was the really early stages of a big crash in the whole crypto market. There's another headline out there that Donald Trump said that he doesn't like crypto, that he thinks it can be used for money laundering, and he doesn't like all the risks with that. And Steven Mnuchin, who is the head of the Treasury, yesterday also said that same thing. So he doesn't like all the association with cryptocurrency and money laundering. And apparently these guys are forgetting that this is not a specific risk to crypto, that $1 to $2 trillion are used in money laundering schemes every single year. So it's not like people go to Bitcoin to do this. They're fine doing it with paper money. And I mean, $1 to $2 trillion, that's like an unfathomable amount of money. And it's even like 10 to 15 times the value of all the Bitcoin in the world. So maybe they should deal with that problem before blaming crypto or associating money laundering on crypto. But I really think these negative headlines are just spread all over the place to kind of create fear surrounding the crypto market because they just don't like it. And you're never going to see like positive headlines make this much coverage. You're never going to see the fact that Venezuela and Argentina are having record high Bitcoin buying levels right now because basically their currencies are worthless. They're undergoing like 1,000% inflation. I think Venezuela now is in the millions of percent inflation. So these people are turning to Bitcoin and other kinds of crypto. And this is happening like all over the world because most countries in the world have some level of corruption, some level of issues with their crypto or with their paper money, their currencies. And they're using Bitcoin as kind of a way around this. So you'll never really see that make mainstream news, at least anytime soon. And there's also the fact that institutional investors are buying into Bitcoin. There's this company called Grayscale. They manage clients' money in crypto. Most kind of investment firms do stocks and bonds and things like that, but they do cryptocurrencies, mostly Bitcoin. And they have reported that the amount of money that they're managing has tripled in the past 3 months. They now manage $2.7 billion, and 84% of that is from big institutional investors that are putting their money into crypto because they really do believe that there is a future for this. And so there's all this positive stuff going on as well. Obviously, people are bullish on Bitcoin. It's gone from like $3,200. It rallied all the way up to 14,000 and fell to 9. Now we're back up a little bit over 10,000. So there's really a lot of buying still going on in Bitcoin, record levels of buying all over the world. And I still do believe that these headlines are just kind of a distraction and a way to justify all these crazy price movements, because that is something that happens with cryptocurrency. You have to be prepared to kind of endure that when you buy in. So even in the last bull run, when Bitcoin went from $200 to $20,000 a coin, there were 8 different corrections or crashes, whatever you want to call them, of 30% or more. So this fall from 14,000 to 9,000, it's about 36%, and it's really not anything unusual. And if you do own cryptocurrencies, if you're a big investor in Bitcoin and you see all this negativity, it's not really too easy to put up with because of these big price swings. But it really, I do believe that it does have a future, and it has a generational backing from millennials. Gen Z is also optimistic about cryptocurrencies. And that kind of leads me into my millennial topic of the week, which is that we really, really don't like banks. And we grew up in the Great Recession. So we were between the ages of 13 and 29 in 2009 and 2010, when 1 in every 45 homes in the United States were being foreclosed on. So we kind of saw the banks at their worst, and it lost a lot of trust from our entire generation when that happened. It's hard to kind of trust banks when you saw them giving out huge loans to people that obviously couldn't afford them, couldn't pay them back, and then they took the people's houses away when they couldn't do that. So it's kind of ridiculous what happened. And there was this huge survey taken that spanned a couple years, got tens of thousands of millennials' opinions on things, and 71% of us said that we'd rather go to the dentist than listen to what banks have to say. And they also had all these brands, all these companies, and they ranked them from the most liked to least liked in millennials' view. And it's not really surprising that the 4 big banks in the United States were in the bottom 10 of that group, or the top 10 if you're ranking it by the most hated companies in America. And that's JP Morgan, Bank of America, Wells Fargo, and Citibank. And yeah, we really just, thinking of going to the bank is you think it's inefficient. You don't really feel like doing it. You rather just do it digitally. Things are kind of moving that way. But we still don't really trust these banks and these big financial corporations. And it's really given rise to the digital economy. So one of the parts of that is mobile payments. So we're seeing like Venmo and Square Cash. I know me and all my friends use Venmo to pay each other. You don't have to go to the ATM anymore. That was kind of inconvenient too. And instead you can just get on the app, send money to someone. It's instant, rather than with a bank, which is like ancient technology where you send money to a different account, someone else's account, and it takes days to get there. Why would you do that when you have things like Venmo and the Cash App? So and these are even getting so popular, people are keeping money in them instead of transferring it out of the app to their bank because it's so much easier. They're going to just have money in there anyway to pay people. Why not just keep it in those apps? And these companies are now releasing debit cards for, like, there's a Venmo debit card, there's a Cash App debit card. So that kind of speaks volumes to how millennials are holding their money, how they're keeping their money, that kind of storing it when it's not being invested or paid for bills or things like that. They're keeping it in these apps. And obviously another thing that we really like as an alternative to banks is cryptocurrency. And there's a stat out there that that recently found that almost 20% of millennials own cryptocurrency on some level. And I can attest to that. Most of my friends have like Bitcoin or Ethereum, some of those big ones. That's kind of a small sample size, but I do believe that 20% is really, really believable when you think of all the millennials, all the optimism surrounding crypto, and as well as all the fear and distrust of big banks. So it's way more prevalent in our generation than others, and that 20% is about 8 times higher than the amount of baby boomers, which is our parents' generation, how much they're investing in crypto. So or 5 out of every 200 baby boomers have crypto, and when you get to millennials, it's 40 out of every 200. And I'm actually proud to say that my parents are in that rare group of baby boomers that own crypto. I talked them into it, and I believe it's going to pay off. It's being backed by basically an entire generation. That 20% was a lot lower a couple years ago, but with this last bull run, it really revamped hopes, it revamped optimism, and a lot of people are buying in, and not just individuals. Like I said, big institutions are buying into crypto now too, which really gives it a big legitimate case for being a real asset. But that, combined with the backing of millennials for an entire generation, is something that I believe is going to have a big sway on how we handle money in the future. So that's kind of my millennial topic of the week, is moving away from traditional banking. And who knows if these big banks are really going to survive. If they're going to be around hundreds of years from now, I would say that is highly unlikely if things keep going the way they are. And that's really all starting with the millennial generation that grew up in the Great Recession, that saw everything kind of go south with how much we trust banks and how much we would rather just have things digitally. And when you have that backing of really a whole generation that's getting more and more into some specific trend like cryptocurrency, like digital payments and things like that, that's not going to go away easily or anytime soon, in my opinion. So that is my millennial topic of the week. And that wraps up this video. Happy Friday, everybody, and have a great weekend.